Volume by itself is noise. Price by itself is incomplete. VPA starts when you compare effort, the participation visible in the volume, with result, the actual movement and spread of the price bar. When effort and result agree, you have confirmation. When they disagree, you've found the footprint of professionals at work. In this lesson, we'll build that lens step by step so you can read the story behind every bar. Think of effort as how many boxes are moving through the warehouse, how much participation is happening. On a chart, that's volume. A tall volume bar means a lot of shares changed hands, someone big is active. Low volume means the opposite, the market is quiet. Without measuring effort, you can't know whether a move is fueled by conviction or just drifting on fumes. Result is how far price actually traveled and where it closed. A widespread candle with a strong close shows big result. A narrow candle shows small result. VPA constantly asks, did the price move align with the effort shown in the volume? If yes, the market is behaving normally. If not, that mismatch is where edges are born. When you see high volume and a wide spread in the same direction, effort and result are aligned. This is confirmation. The market has the fuel and is using it. It doesn't promise straight line trends, but it tells you the move is real, not just a random pop. These are the moves you ride with the background, not fight. Here's where VPA shines, big effort but little result. Price pushes into a level on heavy volume yet fails to continue. That's absorption. Professional money is taking the other side. Into resistance, heavy up volume but a weak close hints at distribution. Into support, heavy down volume but no follow-through hints at absorption of selling. The crowd sees momentum. Pros see liquidity to trade against. Sometimes price glides on shrinking volume. That's a tell, there's no opposing pressure. Effort is actually declining, but result is strong, an easy move through low resistance. It doesn't mean buy anything, it means the path of least resistance is clear for now. When volume returns, watch if it confirms or rejects the move. Low effort with little result is no interest, the market is pausing. On its own it's not a signal, it's context. But when a pullback into support prints a narrow down bar on low volume, that's a no supply test. The signal isn't the bar, it's the location and the background. VPA is never a one-bar trick. Trend and levels decide the meaning. A big up bar at resistance with heavy volume and a weak close can be a trap in distribution. The exact same bar in a strong uptrend away from resistance often confirms strength. Always ask, what's the background, where are the levels, and is the effort, result normal or abnormal here? New traders chase the loudest candle and slap random stops. Pros anchor decisions to effort versus result and the event bar. If a move pauses with low volume tests and then confirms, they join with stops tucked behind the event that proved the story. Your stop belongs where the story fails, not at a round number. Let's stitch it together. First, absorption, big effort, little result, tells you smart money is active. A quiet pullback shows no interest. Then markup glides higher on low effort, easy path. Stopping volume erupts, big red bar, massive volume, but no continuation, selling absorbed. A no supply test prints, a narrow down bar on low volume into support. The first green confirm follows, that is your entry. Stop goes below the event that validated the story. Your playbook is simple. Read effort versus result, map trend and levels, trade tests and confirmations, and hide your risk behind the event bar that proved the setup. That's how you stop donating to traps and start aligning with the professionals. In episode 3, we'll apply effort versus result to support and resistance, where most traders get faked out. Hit subscribe, and watch the VPA playlist next to master this lens.